So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe the key to scaling and compounding your wealth and life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all of it away for MVPs. My name is Brett Swarts. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, where they share their secrets, wisdom, and insights with us so we can all level up, make a bigger impact in this world and in business. I'm excited about our next guest. He's out of Ohio, and he is a PE advisory CEO, CIO, CSO, and board member, and has over 25 years of leadership across Fortune 1000 corporations and boutique advisory firms. He specializes in driving business transformation, strategy execution, and M&A excellence. And his journey spans his roles as CEO, CIO, and strategy leader. And what he loves to do is consistently bring clarity to complex challenges and achieve impactful outcomes, and so much more. Please welcome to the show with me, Mr. Mark Sims. Mark, how are we doing today?
I'm doing great, Brett. How are you doing?
Doing well. Thank you so much. And for our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Sure. No, absolutely. So born and raised in Cleveland, Ohio, lifelong Cleveland sports fan. So, I'm a loyal guy. Haven't put up with so much misery over my lifetime. Kind of from a career perspective, spent the first half of my career in management consulting, working for large Big Five as well as boutique consulting firms, mainly driving transformations in Fortune 1000 companies, or at the time what was called re-engineering, right? So remember that whole phase. But that really gave me a great both process, system, and appreciation for the people side of transformation and having to manage that well. Ended up going second half of my career, went to work for one of my clients, Scott's Miracle-Gro, the lawn and garden manufacturer. Had a bunch of different roles there, from digital transformation. I was the chief information officer. I was the head of strategy and M&A. So really kind of got a broad general background of that business and helped drive the growth there. Eventually went to work as the CEO of one of their company they had invested in. Left that, and then I went back into the consulting realm. And so now I'm with a firm called Consult MSG, where we mainly work with both private and private equity sponsored businesses to help them grow and transform.
Excellent. And Mark Sims, everybody, if you want to learn more about what Mark's doing and where he's at, you go to consultmsg.com, consultmsg.com. Today we're speaking about building a 3T M&A playbook, and I'm excited to dive right in. So Mark, what is the number one secret to building a 3T M&A playbook? And maybe just talk about the first T to start, and then we'll work our way down.
Sure. Yeah. So the first T is transact. Right. So we support businesses both on the sell side, so companies that are looking to sell themselves, and or on the buy side, people that are looking to acquire a company or a set of companies. And really there's obviously, a lot of steps to the transaction and from the deal process. But we really help, and again, I think people should be thinking about how do they think through the lens of the financials. How do they think through the lens of, what are the systems and capabilities that business has? And then what are the people? What's the human capital that you're going to acquire with this business? And I think that's, kind of a key aspect is really thinking about each of those entities or each of those aspects or facets from a value creation perspective as well as a value preservation perspective.
Okay, excellent. So people buying and selling businesses, right, and the entire A to Z process, and financials and underwriting and actual execution of that. That's the first T. What have you found in today's market to get deals done on the transactional side, given where interest rates are and given where the world is dynamic? Is there something that is a secret to getting deals done in today's market?
Yeah, so I think there's a couple things. And again, if you're, like I said, whether you're on the buy side or the sell side, I think, maybe I'll take it from the sell side. I think, it's like anything. You have an asset. How do you make that asset as attractive as possible to sell? And how do you make it clear for the potential buyers to understand how you actually make money, right? And so what I see time and again is you have, pretty successful businesses, and they can't necessarily provide one version of the truth in terms of what their financials look like. In terms of like how do they make money, what's my most profitable SKU, channel, customers, etc. So we spend a lot of time, when we're helping on the buy side, helping to kind of tease out and pull all this disparate data together to actually say, can I understand how they make money, and can I understand kind of where the opportunities might be within this business? Like anything, you shouldn't make it that hard, right? So I think that's where friction enters in when you talk about, kind of what are the keys to doing deals in this market and really any market is how do you remove friction? And that's a big friction point where I can't deliver a clear and trusted set of financials that help the buyer understand how I make money, where my profitability and margins are on a SKU by SKU basis, customer by customer basis, et cetera. And so I think that anybody who's thinking about exiting a business, if they don't have that clear and trusted data set, that's probably an area they should focus on.
There it is. I love it. I think to be unclear is to be unkind. I've heard it said. And I think to be unkind lowers certainty of execution of how I'm going to make money if I'm a buyer. And that leads to less likelihood for me to buy and or a bank to loan, right? And lower loan dollars are going to equate to a lower purchase price for the seller. Okay, so which is not great. Sales price for the seller, purchase price for the buyer. Buyer wants a lower purchase price. So let's keep going on the next T. So what is the first T is transact. What is the second T? And let's kind of dive into some secrets on that one.
Sure. Yeah, the second T is transition, right? So I think there's a couple different aspects of this. So we help companies as they transition. So now you bought it, right? So now you need to go in, and again, we do work with a lot of private equity sponsors, but a lot of times you get in there and, you start to see, what are the processes, what are the systems, what are the people, kind of up close and personal that you're going to be relying on going forward. And sometimes they just don't have either the expertise or the capacity to deliver on, whether it's kind of daily, weekly, monthly type reporting and controls that the buyer wants in place or the new owner wants in place. And so we will actually at times step in as management, whether it's at the controller level, whether it's at the, kind of the head of IT level, the CFO level, et cetera, to help transition for the new buyer to kind of get their arms around what did I buy, what is the day-to-day kind of battle rhythm that people operate this business at. So I think that's kind of one piece. The other piece from a transition perspective is integration management, right? And truly, if you're acquiring a business, and again, it's not a platform, meaning it's not kind of a standalone entity, but it's an add-on acquisition that you're going to add to your existing business. That's an area where really during the deal phase, you should start thinking about how am I going to integrate this business, right? From a sales perspective, from a back office perspective, maybe from a manufacturing, from a distribution, and logistics kind of, supply chain footprint perspective. So hopefully you've already kind of thought about those things. But then as you transition, our advice is always, you need to get on that integration plan as soon as possible. Because a lot of times the integration plan is kind of core to the value thesis, right? we're able to acquire this business. We don't need to acquire, or we don't maybe need to leverage their back office capabilities. So how can we quickly integrate those into our back office capabilities and find some cost synergies? Or maybe the opposite is true. Maybe it's a revenue synergy play. And so if you're not thinking through how am I going to take, maybe there's a B2B and a B2C sales force. How do I start to integrate those two? Because we think we can actually, cross-sell, upsell products that we sell in the B2B space to B2C and vice versa. So I think that's the other aspect of transition is, getting after the integration plan to start unlocking whatever synergies you had in the deal thesis.
Excellent. Speaking with Mark Sims, everybody, you can learn more about everything he's talking about by going to consultmsg.com. Consultmsg.com, management strategy growth, access, communicate, solve, drive value for M&A, buying, selling, consulting technology, human capital solutions. They're here to serve and help you. Just go to their website there. Okay, so that's a lot there, and that's really good. And so transition is the capacity and expertise to deliver on the daily, right? The process, the systems, the people, and the weekly and the monthly. And I love how you guys will dive in with the buyer and to help with the transition to really kind of run it. I think of it like, hey, let's run the next, 3 to 5 missions together, right? These next 30, 60, 90-day sprints. And let's get your team and the people. And because to be honest, like a lot of this, how do you know unless you're in it? Right? Unless you're swimming in the pool, how do you know where to move? Or if you're riding the bike, like how do you know? And so I think that makes perfect sense to jump in there and help them transition. That is huge. Okay, great. So what is the third T? And then let's dive into that one a little more.
Yeah, and maybe one last thing, if you're open to it on the transition,
Sure.
Kind of the value that I think we bring by, as you said, jumping in, kind of. A lot of times the person that you want to keep the trains running on time eventually, meaning I need a CFO that I'm going to, input into this business that's really going to help me take things to the next level, give me the controls I want. A lot of times a keep the trains running on time CFO may not be the let me lay the tracks CFO, right? So a lot of times what we're doing is we're helping to clean things up, if you will, put the processes, the systems, the controls in place, so that you can then have a better understanding of what skill sets do you need for the day-to-day, kind of running and growth of the business. So that's kind of the other value I think by, that we deliver is helping to lay the tracks so that the next person that comes in, the full-time person, can be a lot more successful quicker.
Okay, got it. That's really great. I think that's a great distinction there. Excellent. Let's move to the next T. What's the last of the 3 T's? We'll dive into that one.
Sure. The last T is transform. So again, this may relate to your the value investment thesis. It may relate to capabilities that you identified during due diligence were lacking. But really, how are you going to transform the business to either move into new channels, move into new geographies? Do you have the scalable processes and capabilities in place? If not, we help clients build those processes. As well as the system. So a lot of times, again, maybe it's a brand new acquisition. You're just going to run it. They may have systems that are lacking in the ability to give you the data that you need to better understand and drive the business from an organic growth perspective, or you've bought an add-on and you have now 2 systems or multiple CRMs, multiple financial systems. How do we actually transform the business to move to a common set of systems in order that we can better run the businesses as a single standalone integrated entity?
Okay, so that's the transform piece. What's the number one, I guess, a secret to transform, getting momentum within that? And what have you found the best companies do?
Yeah, so I think the biggest piece of transform in my book and kind of over my career, what I've seen is you need to manage the change effectively, right? And so, I always tell clients, whatever technology you're going to buy, it's a SaaS-based ERP system, CRM system, that system works, right? thousands of other companies use it. It's not like the technology's not going to work. A lot of the challenge you have is, are you implementing and are you managing the change around that new system or the new processes effectively, right? We can all be very humbled where, we've built the new system, we've designed the new process, whatever it is, we're all excited to roll it out. And then the people that, you go to say, okay, we're going to do this. Why are we doing this? I don't understand why we're doing this. Like I have no idea what this is all about. And so really thinking through kind of a robust change management plan to say, are you effectively getting all the leaders in the organization aligned with where you want to go and the change that you want to put in place as it relates to, could be a new org structure, could be new processes, could be a new system. So I think that's a key piece. Are you communicating well, right? So over communicate, whatever your, kind of what the objective is, why are you doing this? And then the last piece is, make sure you're training folks, right? If it's a new system, new process, make sure you've got, enough time built in to actually help the people understand how you want them to behave and how the new system or new process is supposed to work. So I think those things are key. I think the other thing is a very critical thing is not trying to change too much too fast. There is such thing as an organizational capacity for change, meaning if I'm trying to change my entire supply chain network and move distribution facilities at the same time, I'm trying to implement a new system and new processes, and I'm taking on 2 new customers, right? That amount of change, you're just really going to kind of crush under the weight of that change, and you're not going to be able to do anything effectively. So again, managing change both at the organizational level and kind of the initiative level, I think are both key things.
Okay, excellent. Again, speaking with Mark Sims, everybody can learn more by going to consultmsg.com, consultmsg.com. Fantastic. So we talked about really just building a 3T M&A playbook, right? It starts with the Transact side, sell or buy. It moves into the transition phase, and then ultimately moves to the transform phase. And I say hire the who, don't be the how. I think this is so important, right? In this scenario where you guys are providing, you're the who that the people hire, right?
Yeah.
And because you have the expertise of the how. I've heard it put this way, Mark. I've spent 10,000 hours doing what I do so that you could spend 1 hour implementing or basically being able to do what we're going to do now, right?
Yeah.
So how much of that is true for you guys, right? You spent so many times, you've seen so many different industries, so many different businesses, right? And approaches and mistakes and things that you have the playbook, and now it's about executing the playbook. How do you help the entrepreneur's mindset to shift to that and to be able to get the outcomes that they really want?
Yeah, I mean, I think, part of what I think part of the value that my firm brings is, we're mostly made up of operators, people that have kind of, maybe been in consulting or public accounting and then kind of moved into businesses and helped drive and grow businesses. So I think we can resonate very well with our clients as we tell them, this is kind of the trusted playbook to run, whether it's around a specific initiative, as well as we have the expertise, we have the capacity to do so. Again, I think so much of it is about having a plan, right? And so working with, kind of the business owner or to understand kind of, what specific problem are we trying to solve? And then what is the plan in which we're going to actually kind of execute the various steps to solve that specific problem. So many times we hear from clients that are trying to, they come to us with what they think is a revenue problem, but maybe it's a cash collection problem, right? So until you actually dig in and understand kind of what is the root cause, what are the problems that you're trying to solve, that may or may not be, kind of the initiative you thought was going to be needed. It may be something even more fundamental and basic, meaning before we can solve this problem, we first need to solve kind of the basic, you don't have lack of data, you don't have good data, right? So if you come to me and you say, I want to implement AI to automate my, accounts payable processes, and then you ask the question, well, how do you actually execute accounts payable today? What are the rules? Nobody has any idea, right? And so it's like, okay, well, let's start to put some processes in place where we can collect the data that maybe at some point in the future, you could start to automate some of those things. So so much of it is just kind of having the conversation with the business owner to understand kind of, what are the objectives, what are the pain points, and then truly doing kind of some root cause analysis to say this is actually kind of where you should focus your time and effort, in kind of a roadmap type way. And then sometimes that we're terrible consultants from the standpoint of we may go in and say, this actually, as much as we could, implement a new ERP system, you don't need to do that. You just need to use the existing system you have better, right? Like there's no greater functionality that you need than you have in your current system, but you're not using it effectively. And sometimes that may be, sending them off to get additional training and things like that. And then we say, hey, if we can help you in the future, let us know. But it's really, we're not trying to sell you a project that you don't actually need. We're trying to help you solve problems.
Oh, this is really good, Mark. Can you give us like a real world, case study or one you're working on now and one you've worked on recently to bring this to life, and also talk about your ideal kind of client or customer that you serve? What's the team size? What's the average revenue size? When are you coming in? Give us a little bit of that, just so if someone's listening that they go, oh yeah, that's me. I think I could, Mark and his team could help me.
Yeah, again, I kind of highlighted a little bit. We had a client come to us recently, or I guess it was probably 9 months ago, because the project is just finishing up. But they were like, we need a new ERP system. We need a new HR and payroll system. And they were heavily leveraging paper, right? A lot of paper from the field, a lot of field services work. And so we went in, we kind of took a look at the existing, kind of current state processes, current state systems. And I would say, we kind of came to a half conclusion on the new systems. They absolutely could do well with a new and improved HR system that allowed them to capture time and expenses in the field, and just feed that in from a payroll perspective. That was going to allow them to bill their clients faster, collect cash faster, as well as take a huge kind of burden of paperwork off of the back office staff. But as it related to their kind of financial system, again, what we concluded was the financial system was fine. People just didn't really know how to use it effectively, right? It was one of those things where, it was implemented by one set of folks who then trade the next set, who then trade the next set. And over time, there was just knowledge lost, that kind of intrinsic internal knowledge as to how the system was built, as well as there's some kind of technical aspects of slowness that, we were able to implement some pretty cost-efficient solutions to mitigate those things. And so, again, until you get in and really diagnose what the problem is, you don't know what the right solution is going to be. So now they actually just recently went live with the new HR system, and are really quite happy with kind of the outcomes from that perspective.
Okay, that's very helpful. Is there also like a team size, or like a revenue size, like that you kind of have a general frame, like doing at least $1 million or $3 million or $5 million in revenue, or doing, have at least this amount of team? Like, is there any kind of sense for that? Just so we can kind of narrow it down a little more.
Yeah, I would say, kind of our core clients are between the 20 and $100 million in revenue. Okay. Right, which could be positive EBITDA or could be negative EBITDA, right? On that, whatever that amount is. We work with clients up to $2 billion, right? But really, kind of the core sweet spot is probably that 20 to 100 million. And a lot of times, and again, I run our technology solutions group. A lot of times, these businesses, they don't have internal IT kind of resources. They're leveraging managed service providers or third parties to help them, which is fine. But a lot of times that's where we can be really effective to say, are you getting the most? You don't necessarily need to hire someone. We get it from a scale perspective. But are you getting the most out of whatever providers you're using? Are you effectively, kind of using all the technology that you're paying for on a monthly basis or annual basis? And then, again, when they're looking to acquire businesses, again, where we're very helpful is, again, they don't have staff, they don't have an M&A team per se, So they're able to leverage us as the kind of the arms and legs to help them execute and transact on their behalf.
By the way, I think it's just so smart, right? Because the fact that you guys are vertically integrated in these areas also equips you to be able to underwrite properly the business and what's actually going on, right? You're like, hey, we were just with a company that's very similar to you. There's probably some things that we want to uncover here and dig down on the due diligence process, because it was a pain point, and it was a big roadblock over there. And chances are this could be it as well. So, and then you uncover that and you're like, oh my gosh, this is why we would never buy this company, right? Or until they get that in order, or what we thought was worth, 150 million is only worth, 88 million, right? Because you can articulate what's actually going on in the X-ray. Is that a fair summary about how you add value to your buyers?
Yeah, no, that's absolutely right. You can kind of, the simple math of a kind of deal size is, EBITDA times a multiple, right? And so there's things that you can do and things people should be doing day in, day out to increase EBITDA, focusing on margin, focusing on operational leverage, and kind of growing their EBITDA. But there's also aspects of the multiple, right? And the multiple is, in a lot of ways, is a quality assessment of what am I seeing, right? So there's some kind of industry component to that, like, what is the going rate, market rate for a roofing business? But you also then have kind of pluses and minuses, right? And how do you manage what I'll call the value destroyers, right? We talked about one at the beginning as it related to having a clean and trusted data source to say, this is how I make money in my business, right? That goes a long way to showing that you've got controls. Also, things could be simple things such as having SOPs, having the actual contracts. This sounds silly, Brett, but like having the actual contracts with my customers and or my suppliers. So if I have a key supplier that I'm saying, I get this great rate from, and I'm able to purchase really effectively, but I don't actually have a contract, or I can't produce a contract, that's going to be a value destroyer in a buyer's mind, right? So it's always ways to think about that multiple as, yes, it is what it is, and your banker might tell you they're trading at a 6 to 8 multiple, but there's pluses and minuses, and that's part of what comes out of the due diligence is, do you have the basics in place that justify you getting an 8 versus you getting a 6 or lower, because the quality, you may have a great business, but if you can't kind of prove that you have a great business, the buyer's not going to take your word for it. They want to see evidence of that.
This is so good. So in my beginning of my career, I started a company called, I started out as a commercial real estate agent at a place called Marcus and Millichap, and it's investment real estate brokers. And so we would be able to show up to an apartment complex, 100 units, be able to walk all of the units. We get to walk the grounds. We get to look at the profit and loss statements, look at the bank statements. We can look at the leases that show that, hey, this property is leased by this tenant at this price. And it was so tangible, which is part of why I loved it, Mark, because I could go see, feel, touch, look, kick the tires of the numbers and the property, and then you do like inspections of like the roof and the AC units and the average life that's left on the refrigerators, and do they have is the utilities being paid by the tenant versus being paid by the landlord? Are there individual hot water heaters? Like, you just kind of keep going, and you start to see patterns, right? I think I had a much easier part of valuating assets at that point compared to something that's dynamic like a business. But I imagine there's certain key components that are the repeatable patterns that after having the 10,000 hours plus like you said, the CPAs that you have, or maybe you are from the background, that this expertise is so highly valuable and rare, and it's hard to duplicate. Is that a fair summary on that, Mark?
No, I think it is. And part of it is doing it rapidly, right? Because a lot of times, again, we have diligence requests, but when you think about all the different disciplines, you have people looking at the insurance, you have people looking at the financials, the IT, the commercial diligence, et cetera. The management team will get taxed, right? They have limited time. They're also trying to run their business at the same time they're maybe trying to sell their business. So again, I think that's why it's so important. If you just stay organized, right? Which is, even if you never sell your business, these are solid principles. to, have copies of all your contracts, have written agreements with your customers, where it makes sense. Have solid systems, have one trusted data source that you can mine to say, where and how am I making businesses? Where do I have margin leakage? And then you can actually go in and fix that, right? So I think that's, a good way to run your business on a day-to-day basis, but also it's invaluable if and when you choose to exit your business. You have all that in place, and it's not a scramble to now grab all this documentation, because to your point, the buyer wants to see the evidence. They want to walk the building. They want to look at the quality of the AC units, et cetera. It's such a great parallel when you think of from a real estate perspective, because essentially what you're doing when you're selling a business, you're marketing and selling an asset, not unlike a property.
Yeah, excellent. And speaking of exits, let's dive into capital gains tax challenge that people have when they go to exit their $50, $100+ million business, right? And they're facing massive capital gains tax. I have a solution that we focus on like a laser, and we've like to say we've mastered it, and we help a lot of business owners. We did a $70 million deal out of Connecticut, and then another $40 million out of Arizona. These are business exits. I'm curious, Mark, like what's been your go-to and or things that you've seen others in the past use to defer or to build a capital gains tax exit plans that allows entrepreneurs to be flexible and be able to invest and do the things they want to do?
Yeah, I mean, I think what I'd say on that topic, because I'm not a tax expert in any way, shape, or form. What we always encourage people, and this was true when I was at on the corporate side and we were acquiring businesses, we would plead with the target, the owners, to get the best advisors that they could, right? Because both from a lawyer perspective, get an M&A attorney. Don't use your buddy who's a general attorney. Get expertise. The deal's going to go faster, and you're going to be better protected. And then on the tax side, we would absolutely always tell people, you need to get the best tax advisor you can, because there are strategies, and again, you were referring to some, there's strategies that are going to make you way more money than you trying to negotiate for the last quarter point of a turn on multiple, or you're fighting, the adjusted EBITDA, you think you can adjust out, this particular $100,000 expense, and the buyer doesn't think you can, and you're negotiating and driving that. Whatever you're going to kind of gain on that amount of effort, the tax, making sure you have a sound tax strategy is going to save or create way more value than focusing on some of that minutia. So, what I've seen and what I always direct people to is make sure you get the best and most competent tax advisors that you can, that are either industry specific and or are just clearly focused on M&A, because they're going to be able to give you a lot of options to create and or preserve value in the deal.
Excellent. Yeah, I'm going to speak on one right now. It's known as a Deferred Sales Trust, and it's a trust with an installment sale that allows business owners to exit. Now, 10 million and below, it works great for our 1.0 version, because there's a cap on what's called the 453 installment sale reporting rules, but it allows you to defer all the capital gains taxes as long as you don't have debt over adjusted basis, and then gives you the ability to invest the funds back into new business ventures or into the stock market and basically diversify. And it typically gives people an extra 20 to as much as 50 or so % more of the proceeds. And I could agree with you more, Mark. Like you're jumping over, the dollars, and this side, millions of dollars in order to pick up, dimes. And it's you got to be really, really careful on that, because you spent 10,000 hours building this business, let's say all the blood, sweat, and tears. If you just spend a couple hours with our team, we can build a plan to give you an extra 20 to 50%, which is staggering. So what is the return on your effort and your energy? Kind of another ROE to think about, and you can build it collectively with the tax attorney. He's the genius. I'm just the trustee on this scenario. thousands of transactions, close to 30 years, over 30 no change audits. In fact, we believe that this attorney, that my business partner, no one's done more of these type of exits for. He was a former M&A, Fortune 100 M&A advisor, but now he just does all tax work for exits in the country in the last 30, 40 years. He's the top guy, and so that's what we do. If you want to learn more, go to capitalgainstaxsolutions.com. And then if you have a $100 million or $1 billion exit, the other one that most people don't focus on, Mark, is the death tax or the estate tax. They either think and get confused that a step-to-step basis is going to solve for that, which it's not, and or they don't have a great plan. They either buy a bunch of life insurance, which it's really expensive, give it all away to charity. Nothing wrong with that, but most people don't want to give it all away to charity, or gift it away to the kids as fast as they can, but they run out of kids. So we have a strategy, a 2.0 version that allows you in one day, one sale to a buyer, let's say it's a $1 billion exit, to eliminate that estate tax forever outside the taxable estate on the sale. And then the kids can be the beneficiaries, and all of it eliminates that 40% death tax, which is a killer, right? Because if you're worth more than 30 million married, you're going to be subject with the death tax. And so we also can solve for that. You can go to capitalgainstaxsolutions.com if people want to learn more. capitalgainstaxsolutions.com. We also have a book with Kevin Harrington from Shark Tank called Building a Capital Gains Tax Exit Plan that you can pick up on Amazon. That being said, Mark, we're running out of time. You ready for the lightning round?
Absolutely.
All right. Knowing what you know now, if you go back to your 20-year-old self, what's the one gold nugget make sure to tell yourself to do?
I would say enjoy the ride, right? Make sure you get, especially from a business perspective, you get in the weeds. You're working long hours, but just make sure you enjoy what you're doing, and it's going to be tough, but you're going to be better off for it on the other side.
I love it. Question number 2: what are you most curious about right now?
I'm most curious about how people are actually going to unlock value from AI. Again, we use it in our business every day, and it's a great productivity tool. But really, what I always say, and this isn't my unique thing, but like the worst AI we have is what you're using today, right? It's only going to get better. And so when you start to think about all the things that you can automate with it, I'm really intrigued to start thinking about, what are all the opportunities around it to unlock value in existing businesses, and what are some new businesses we can create.
Excellent. Question number 3: what's the number one leadership quote or theme that you strive to live by?
I would say, the quote I love is that I use often is pick a strategy, have an ability to execute, right? So that to me is always, if you're a business that's doing one thing, it's great to pontificate and think, well, we can do this other thing. We're currently building, houses, so let's go build data centers. Well, you may have kind of basic construction capabilities, but maybe you don't have the ability to execute a strategy to migrate, straight away into building data centers. So that's kind of a key thing that I always challenge my clients with is, great idea, but make sure when we say the ability to execute, it all gets down to capabilities. Do you have the team, the time, the capital to execute whatever strategy you might think is kind of the new one?
Excellent. And then we're out of time, so we'll just end with this last question. After all your work and helping all the people you've helped, how do you best keep a mindset of stewardship over ownership and stay disciplined to reach even higher heights from everything you've achieved?
Yeah, I mean, I think I'm always, I have a continuous learning mindset. So everything that I do, I always think about, what don't I know, not necessarily what do I know. And that's always kept me curious, which is, always has me looking for new areas where I can learn and grow.
Phenomenal. Mark Sims, I want to thank you on the show. I want to thank you for, dropping and providing tons of wisdom and insight for us in the last, 38 or so minutes. For our listeners, I encourage you to keep doing what you're doing. Help these entrepreneurs, help these business owners be the backbone of really changing and providing American jobs and innovation and technology and impact. All of these things with transitions and transactions and transformation. For those who want to get in touch with you, Mark, and your team, what's the best place for them to find you?
Yeah, as you've kind of mentioned, consultmsg.com, or you could reach me directly, msims@consultmsg.com.
Awesome. Thanks, Mark. I also want to thank all of our listeners for listening or watching another Build It to Billions podcast and Capital Gains Tax Solutions podcast. We're streaming on both channels. I want to encourage you to take action today. We're on this journey with you to scale from millions to billions, so we can give more all of it away to help MVPs, the most vulnerable people. Share this with someone who could change and encourage, especially if they're doing that $20 to $100 million. Bigger companies, bigger businesses, or if you're listening to this, consider hiring Mark and his team to help you with scaling up and or transitioning. And of course, if you have a big exit and you want to build a capital gains tax exit plan, I encourage you to do that by going to capitalgainstaxsolutions.com or picking up the book, Building a Capital Gains Tax Exit Plan on Amazon. Appreciate you guys all are listening, watching out there, and we'll talk to you real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.